to you on December the 1st, Saturday, with the big picture, and then we'll drill down into some trades. The S&P 500, remember we talked about point and figure levels. We talked about the 1432 and the bottom of this cloud, or kumo. We didn't talk about the fact that this was support back in September. We bounced off of it a couple of times. We came up, we made a lower high, and then we broke down through it. Alright, we put in this pivot where we're close to the 1432 area, but we hammered at this point, and now we've rallied up since then through 1370 and 1404. We flagged on 1404 for a couple of days. We put in this hammer, and then we're gradually moving higher. We put in a doji on Friday, and we're either going to move higher or we're going to move lower. My sense, because of the number of stocks above the 50 period MA and the on balance volume climbing, that we're going to see higher before we see lower. It's a possibility we could gap up on Monday and continue on Tuesday, and then hit this area and make some decision. Okay, if we look at the point and figure, we can see that we put in a high. This was resistance up here. We have a double top, turned into a spread double, triple top. We broke above it, and that was a support level that we lost, and then we broke down. Okay, now we're back up to that level. We're still in a long-term uptrend, signified by the trend line, and we could put in this spread quadruple top right here and break above it during the hopefully Christmas rally. Note the Fibonacci levels as well, from this high down to this low. We have the 618 right here, and the kumo in between here, and 100% retracement. We are overbought. Shifting over to a regular candle chart, we are overbought. We had nice volume on Friday. You can see our stochastic, and if we look at our MACD is spreading out and headed towards the zero line. So we could see stochastics embed up here and continue that move up to that kumo that we pointed out, which also coincides with our point and figure resistance level at 1432. Russell on the weekly, there's an ascending triangle pattern here as well. All right, so keep an eye on that, bouncing off the cloud for the last 2 weeks. Note the comp, we broke out of this channel. We have a TK cross. We are overbought. If we look at the NASI, we had a cross back last week and a buy signal. And if we look at this area here, we have a Kirby, and we're starting to see some resistance up here at the kumo. This is the daily chart. Again, looking at the big picture, trying to filter out the noise. If we look at copper chart, let me turn this grid off. I don't like grids. Note that relative strength is really climbing. We have Bollinger Bands expanding. We have an overbought situation on stochastics, but remember I use MACD in conjunction with stochastics to give us an idea, like we did here, whether or not we would embed. When we hit overbought back in September, the MACD was saying that we could embed, and we did in fact embed and move sideways for almost the entire month. So watch for some continued strength on copper. Looking at some levels here, let's look at a point and figure chart. Note we have a lot of resistance at that 375 level, running all the way across here back to 2006. Okay, we didn't quite make it up to the $4 level, but a few times over in 06, 2008, and we got above it in 2011. But we broke that down back down below that level. Now we're looking at the 375 level again for an area of resistance, which you can obviously see here in the regular chart. Alright, so keep an eye on copper. Let's look at DVV, which is our currency harvest fund. We've come back down to the 20 period moving average, the middle of the Bollinger Bands. Relative strength is drifting a little bit lower, but we could always come down to the 50 and then move back higher. We're overbought on stochastic, and we're moving sideways on the MACD. So the carry trade, we're moving back to the area of a breakout, and we had a nice close back above the 8 period moving average on the daily chart. Looking at the euro, we can see that we have some relative strength here. Moving higher, we have this 300 period moving average, which is basically a trend line connecting these highs. You can visualize that. And we look like we want to break above that. Depending on what the euro news is, I'd be watching the euro. Let's take a look at the euro-US dollar. Looking at the euro-US dollar cross, we can see that we're sitting right on top of the kumo. We had a kumo twist. We look like we're headed back in the other direction. We're overbought. So I'd be watching this trend as we pointed out on the regular chart. If we break above that. Looking at bonds, TLT, we can see we have the kumo down here. After breaking out of this descending channel, where we tested it several times, moved above it, and then moved back down below. Note where stochastics is, and the fact that as on the point and figure chart, we have an uptrend line here at 122, that if we break below that, we could reverse and start moving in the opposite direction. Okay. No bullish percents on the comp have bottomed and they're moving higher. The discretionary, same thing. Also the SPX, obviously you would expect that after that bottom 2 weeks ago on Friday. We have a nice little move here. Transportation, tele, and a few others are still down at the bottom. Utilities drifting lower. Looking at the sector performance charts against the S&P, we can see that utilities is standing out in the last week. If we move out to the past month, you can see that utilities were underperforming and that consumer discretionary was outperforming, as well as industrials, materials, and consumer staples. There were standouts. Okay, so if we come back to about 2 weeks or 13 trading days, we can see in relation to the S&P 500 that consumer discretionary was doing well, as you would expect. The holidays, technology has been doing well, and all these others relative to the S&P. The shining stars are the outperformers are consumer staples, materials, technology, and consumer discretionary. So you can scan those sectors, okay, for stocks that are in patterns that look to continue to break out, ascending triangles and so forth, breakouts of descending channels. Okay. Alright, that's it for now. I'll probably post another video later or some charts, but for the most part, looking pretty good. Take care, remember to use your stops, and we'll talk to you later.